News. Joining me is Mr. K.V. Kamath, the head of the new development bank. Mr. Kamath, thanks very much for joining us here in a very cold Davos. It's all about China, Mr. Kamath. I mean, Xi Jinping was here. He wants to now be the sort of advocate for globalization and free trade. What's your own sense of the reception that he got and the China story?
I think he got a great reception, and for a reason, because I think the rest of the world leaders, look at Europe or Asia, are looking to see who will fill, in a way, the vacuum that America at times says it wants to leave in the global economic context. So clearly China is stepping into that space, and the people are listening.
I'll come back to China in just a bit, but let me ask you about India. You've always been a bull on India. People have downgraded the growth forecast for India, including the IMF very recently. What do you make of the downgrades that have come in?
Well, I know my own assessment is it's too early in the day to actually talk of GDP slowing down and so on, because we need to understand where this will stabilize, and we have not seen any degree of clarity on that. For example, what will be the impact on inflation of the move that has been done? What will be the impact on interest rates? And thirdly, what will be the lending appetite that the banks would have going forward with the lower interest rate climate and a cleaner, I would say, structure in terms of the marketplace. I would think all these should be positive, so I'm a little bit surprised why this is negative. Now, for it to be positive, there are certain preconditions that we need to look at. We need to make sure that interest rates do go down, so that you have infrastructure spending and consumption come up. Because
how much do you see interest rates going down by?
I can't see how it will not go down by a percentage point. No, as I say it, at this point in time, given the liquidity in the system and the stabilization exercise that the Reserve Bank is carrying out, interest rates are being held in place. Now, if there is any change to the stabilization exercise, you will have a pressure on interest rates to go down. And if truly inflation, consumer price go down as everybody expects, then there is even more pressure for the bond yield the bonds to go down and the bond yields to drop. So to me, these combination of steps are good to the banks, because if bond yields go down, they have a treasury profit, and that should actually put their woes behind. These woes for incremental capital could be out. Just to put the number in context, a 1% drop in the yields of government bonds would mean a profit of about 150,000 crores for the Indian banking system. And that's more or less your problem solved. And then, let's say 1% lending rates come down, the consumer is going to come roaring back. So I look for that day. And after that has happened or not happened, I would like to take a call whether the economy will go up or down. So as of now, I would think I don't see any clarity that the growth rate should go down, but I see a lot of potential, in fact, that the growth rate should go up.
So you see an upside bias.
After a small probably dip.
Okay, so you're saying that it's too premature to say whether growth is going to be impacted negatively or not post-demonetization. But if I may ask you about the manner in which this exercise has been implemented and the role of the regulator, because today in the Parliamentary Standing Committee, we are going to see the RBI governor answering questions, we are going to see finance ministry officials answer questions, and there has been criticism from former Reserve Bank governors and others on the role that the Reserve Bank has played through this. I want your assessment of what the Reserve Bank should have done differently.
You see, as I see, whatever I have to say is from a distance, because I've not been on the ground as it were there. But having said that, a move of this sort has to be kept very close. Obviously, it was kept very close. Thereafter, you can always criticize execution, but if the fact is that in the given time frame, 50 days or so, things have come to near normalcy. I'll just take two indicators. You remember, end of November, there was a huge issue whether payday, November 1st, or December 1st, how would it pass? It passed. And then same questions on December 31st. And of course, again, it passed without too much of
there have been constraints on withdrawals as well, sir, which have not entirely been lifted. They've only been relaxed.
What proportion of Indians really spend at this point in time more than 25,000 rupees in a week in cash? Now, we have this much stated number. There are 24 lakh Indians earning more than 10 lakhs. These are probably that would mean 1 lakh a month if I were to round off. 24,000 a week is 1 lakh a month. So, a question that arises is that where was this money going? And if the aim of the whole exercise was also to make sure that money that goes out into the system is tracked and traced and in a digital form, I think that probably the first target has been met.
So